Let's talk to the international economist, Vicky Pryce. Vicky, welcome back. So UK inflation rising to 3%. How much of this was driven by things like higher energy costs and how much by the UK Finance Minister, the Chancellor of the Exchequer's recent budget?
Well, the budget has had an impact in that with VAT now being imposed on school fees, that's led to an increase in that bit of the CPI, the Consumer Price Index, by 13%. Year on year, but that of course may not be repeated because though it hasn't been up to 20% that it could have been, it's unlikely that we're going to see many increases following this 13% rise that we've seen in January on school fees. But other things have been a little bit worrying. Of course, the service inflation has gone up. So although the school fees one will disappear from the equation, so in February we're not going to see it, there are other things. So service inflation has gone up a little bit more than had been anticipated by the markets, but actually not as much as was anticipated by the Bank of England. So we have 5% service inflation right now. Up to a point, this is because, of course, wages are going up and are going up in crucial sectors. Like the construction industry, hospitality, for example. So all this is passed on to consumers. So that's one of the reasons why the services are going up. Plus, of course, we are likely to continue to see things like water bills going up, cancel rates going up in the next few months. So the likelihood is that inflation is going to stay elevated for some time. And that, I think, is the concern. That's why the Treasury said what it did say. On the other hand, other things that happened are just accidental. So, for example, airfares. Airfares come down normally in January. They go up in December, come down in January, but because they didn't go up, quite as much in December and they didn't come down quite so much in January. So year on year, therefore, sort of it just looked as if airfares are a bit higher and therefore that's pushed the CPI up than would have been the case otherwise. So these things tend to even out over a period. Nevertheless, I think the important thing to remember is that the Bank of England is still expecting that inflation will go up to something like 3.7% at some point and might even be a little bit higher if it averages 3.7% for some part of this year. And that, of course, means that they're going to have to look again at what happens to interest rates.
Well, absolutely. How does this inflation jump affect the Bank of England's interest rate strategy? What's your call on that?
Well, it's interesting to look at what the markets have done. The markets have raised interest rates slightly. So if you look at the bond yields, they've gone up a little bit. This suggests that the market think that perhaps interest rates are not going to come down so fast as perhaps we had anticipated originally. Now, the Bank of England, though, had already put that into its estimates. So when they cut interest rates quite recently, whereas the Fed didn't do so, I've just been listening to what your correspondent was saying there about the US, they did say that inflation was going to go up, but it was going to go up because of external factors that were going to be transitory, and therefore things were going to stabilize afterwards. So my view is that we're still on the path of cutting rates. They may not be cut as fast as perhaps most homeowners are hoping, but mortgages are already beginning to decline, mortgage rates. And I think what this means is that the markets think that interest rates will overall still be on a downward path over the rest of the year.
What does it mean for UK politics then and for people's lives? I mean, how does this inflation rise impact UK government's economic plans and budgetary decisions later in the year?
Well, it is a problem for them if it means that companies are constrained by the higher costs coming in, for example, and therefore perhaps their growth isn't going to be as fast. But it's interesting, again, when you look at the details of what's been going on, input costs are down year on year to industry. Producer prices are up only a little bit. So what it means is that there aren't any huge pressures. Where the pressures on inflation will come, though, is because of the increases in national insurance contributions, which the budget announced back in October. And those, from what we understand from firms, will mean that they will pass some of that on in prices. So what it does mean, therefore, is that there will be an issue in terms of affordability of anyone going about their business because prices will be going up. On the other side, and positively, wages are going up quite significantly, much higher than inflation. So there is still the possibility that the consumer's confidence, which has been quite low, will recover because of those real increases. And maybe, therefore, some of the growth anticipations of the government will be met. But I'm afraid overall, if you balance all this out, the expectations now are that we see lower growth in 2025 than was expected originally.
Vicky, good to talk to you. Thanks for that. The international economist Vicky Pryce in London.